All right, guys, we are live on the Red Room with the Phoenix REIA for episode 105. We're just clipping along. We'll be at episode 200 in no time, but just a little market update. Inventory is actually kind of cruising around the 23,500 mark. So it's made its way down from 28,500, which, isn't quite 20%, but it's close. So that's a good thing. I did look on the Cromford report, and I did notice that like around 40% of those are cancellations, but I still am of the opinion that less inventory on the market is better than more inventory on the market. So that being said, I also hopped on the Cromford report, and I think there was only two cities. What's up, Luke? There was only two cities that were the Cromford Index. I don't know what it's exactly called, but there were only two cities that had a bad or the red Cromford Index, Maricopa, and I believe Buckeye. Everything else was not like awesome, but it was green. It was check green, and now it might have only been up like 0.01%. But it was up. So there were some positives on that as well. So, but it's, seasonality is here. It's fall. Nobody expects a bunch of home buyers to come roaring out of the market in September or October. So, it's, I've just finished my last of 5 flips. I told my daughter I'd go back at it, but I'm no longer buying Jack's duds. I'm buying the I pick. I was just like, Jack's like, I can't sell this. Take it. Lose $5,000.
Man, it's a nice little backup.
Oh, man.
So anyway, that's a little market update. Now we have Shae. She's jumping on. I think she's been on here 2 or 3 times before. I don't remember. She is with Vantage IRA, which I do I actually use a self-directed 401k, but I lend hard money. I do some fix and flips. I do all the fun stuff with my self-directed, and I think I have somewhere around $500,000 or $600,000 in mine. So like I can do some hard money loans. I have a couple wraps, but it's just fun. It's like, I got this one paid off. I got some cash. Let's go do another deal. And what's cool about it is when I do the deal, I don't pay taxes on the profit. So that's kind of fun. Anyway, thanks for joining us, Shae.
You're welcome. Thanks for having me. Love this topic.
And then if you get a chance to become a client of Shae's down the road, check out like that background is like, I don't know if that's exactly her office, but her super cool. Like it's beautiful.
Cool. She works out of the Biltmore Lounge. Yeah.
I know, right? Yeah. I'd say I was just telling them before, I usually record upstairs at our office, and something happened there with our little studio. So here I am with my virtual background, but Chris is right. He has been here, and it is somewhat similar, although we're not in the house. But the style is similar.
It's very contemporary and cool. It's just, like that's a cool office for sure.
Anybody can come by, even if they're not a client, but yeah, come here and meet with me.
We need to throw, now that it's getting cooling off, we need to see if we can throw an event up there on their little upstairs. Like they got an upstairs patio. It's like outdoors. Nice. It's really cool. So
happy to host.
All right. So how do where do people start to buy their next flip from Luke? He's going to wholesale it to them. Like, where do they start? Where do they go? What do they do? Like, are they coming out of a corporate job, or are they still in a corporate job? What are the angles?
Yeah, so I think there are a couple angles we can look at. Chris, obviously you work with people who have retirement accounts from your end, but also anybody that's wanting to purchase their own and maybe use their own retirement account. We can talk about both ways. But the first question to ask is, do you have a retirement account? So whether you have an old 401k or a 403B or a 457 or a defined pension plan, any sort of qualified plan, you can roll over either a portion or all of those funds into a Vantage IRA. We specialize in facilitating and doing all the record keeping on that IRA that's going to allow you to invest in things outside of the stock market, like real estate that we're talking about today. So first off, you have a current retirement account, either an old qualified plan or an existing IRA at any financial institution. So if you have a traditional or a Roth or a SEP IRA already at another financial institution, it's as simple as opening an account with Vantage, set up in the same structure. So traditional funds you have over at Fidelity, you would open up a traditional account with Vantage or a Roth account with us if you have a Roth. So first question is, do you have an account? If you do, you can either move over all or a portion of those accounts to facilitate your next deal through a Vantage self-directed IRA. The account process is really easy, and you can contact me and I can be your guide, walking you through filling out an application. It takes less than 10 minutes to fill out an application with us. Really low flat fees for all of our services. And the process is so simple, you guys. Opening account, I help you fund the account, moving over the 401k funds or the IRA funds. And once the funds are in your Vantage IRA, then we can assist you with whatever project you want to move those funds into. So whether you're straight out purchasing your flip with all of your IRA funds, or you're loaning your money to someone else, or whatever that investment vehicle is that you've got, we can help you with that.
Heck yeah. I got a quick question for you, Shae. So is there like a specific time frame or period that you're allowed to hold on to that money for, before you have to put it back into the account?
No. So you meaning the gains, all the interest?
Yeah. The gains, or even just the money that you took out. If is it a scenario where it's like, okay, this money has to go back into this account by a certain time frame?
Yeah, I'm so glad you asked that. So think of the IRAs that we have at Vantage are the same type of retirement account that you currently have at another financial institution. So the IRS looks at our IRAs with the same rules and regulations that you do at another institution. So let's say you want to pull money out from an IRA, the government gives you 60 days to get those funds from your current place over to Vantage without them considering that a distribution where you would find any tax implications or taxes or penalties. So as long as you're getting that money over within 60 days into another tax deferred account, you can keep it here as long as you want. Then those same rules apply as far as you can have that compounding interest in your Vantage IRA here, and you can continue using those funds on your next real estate investment deal or next syndication or next promissory note. So you can keep the money in that account for as long as you want, but the same rules apply that you would be familiar with maybe you talk with your current CPA or your CPA on. You can't pull the money out of any retirement accounts until you're 59 and a half without any tax implication there. And then once you get to that retirement age of, later when you turn 73, then you have those required minimum distributions where you need to pull money out of those accounts. So all of those rules that you're familiar with, wherever your money is now, are going to also apply at Vantage. But you'll want to consider if you want to use all of those funds for alternative investments. So for any sort of real estate investment, you would need to keep it here in your Vantage account to be able to do that. And if you're diversifying them, having your funds in the stock market, maybe at your Schwab or Fidelity account, you're going to just keep those vehicles separate for two separate things, your private alternatives over here, and then your traditionals over there.
Makes sense.
So Shae, you had mentioned a timeline for you have to place those funds within 60 days. I also have private money lenders that will use self-directed IRAs. So can you talk a little bit towards how soon in advance of the close of escrow should those funds be prepared? Because it's different if you have those funds liquid versus in an account. So maybe you can talk to that timeline.
Yeah, we'll talk time frame. And I want to clarify too, when I was talking about the movement of funds, you don't have to place your funds in anything within a certain period of time, but to move your funds from one account over there, let's say at Fidelity, to a tax deferred account at Vantage, you have some time there, but typically we want to make that a lot faster. So most people want to get the funds over within a week.
Right.
So time frame wise, opening your account at Vantage, that takes 1 to 2 business days for us to process your application and get that account open. Then we're kind of at the mercy of the current custodian and what their protocol is and what their process is. It can take 5 days, it can take 2 weeks, it can take longer than 2 weeks, depending on what their processes are and how responsive they are to our request as well. So I always tell people, if you know you want to use your retirement funds for one of the deals that we're talking about today, give yourself 3 to 4 weeks just to make sure all of your ducks are in a row. You get the account open. We're working with the other custodian to get that money into your account. Yeah. And then you'll also have to fill out some minimal paperwork, but still you need to fill out paperwork for us to initiate that investment, whether it's a purchase or you're loaning your money. Right. But usually 3 to 4 weeks. We have made miracles happen before. It's possible, but definitely don't wait until the last minute. If you're knowing that you want to do this, at least get the account set open and get the ball rolling.
Mm-hmm. So another kind of interesting question, which God forbid nobody wants this, but what happens if you loan your money out or if you put your money into a project and you lost it?
Same risk involved if you lose money in the stock market. I mean, okay. It's the same risk factor there. Yeah, so you'll have to do your due diligence and choose the right properties, choose the right people that you're working with. But as far as our role at Vantage, I also want to let everyone know too that we are truly just an administrator on your account. We're not selling or endorsing any products. We're not going to be vetting any of your deals for you. Yeah. We don't have a marketplace, for example, on our website where we have a list of potential deals. We just help you facilitate that transaction and make sure we're kind of keeping you out of trouble as far as compliance goes on your IRA. But outside of that, it's going to work just like any other investment.
Because I was wondering if, maybe there'd be like penalties or, getting hit twice because obviously they want your funds in there. So obviously, if you lose it, you wonder if the other companies are upset about you losing their money.
Yeah, no, I mean, we have a low flat fee, an annual fee to maintain your account. And then we charge a low transaction fee of $175 to either purchase or sell an investment. But what happens outside of that, as far as the growth of your investment or any loss there is, kind of on you.
Right.
I think I know the answer to this one. Let's say I'm a Intel guy right now, and I came from Honeywell. Like I spent 10 years at Honeywell, and I have a Honeywell retirement account. Now I moved over to Intel. I'm investing in the Intel account. I really can't do anything because that's the active account that I'm employed by. But the old account, I can take that money and move it over to the self-directed. I'm like, I'm not working for you, Honeywell. I can move that over, right?
Yes, exactly. If it's a former employer, the plan documents and that administrator usually when they develop that qualified plan have some restrictions in there based on what you can do with that money. Most of them, 99.9%, I believe, are going to have something in there where as you're an active employee, you cannot move that money out of the plan requirements and all of those, how it's defined in there. But when you are, whether you leave your job or you get laid off or you quit or whatever, yes, if it's a former employer, your account now is free to have you move it wherever. And I think most people don't realize that. Not only do most Americans don't know that we can use our retirement funds outside of the stock market. It's just that the large financial institutions, all those big names that we know of, they're personally invested in the stock market. And so that's the message that we hear. But yeah, and you're able to move your money into any custodian at that point, because then it's technically in your possession. You were the person contributing that money. Now you're not tied to that plan anymore. And now you can move that just like you would if you had an IRA that you can move. Yes. Thank you, Chris.
And for just a little thing for you guys watching, us active investors, I mean, you can leverage that a little bit too. So like, for instance, you bought a house for $250 and you put, let's say 20% down, that's 50 grand down, and then 30,000 in rehab. You might make, $30,000 or $40,000 on that flip over a 6-month time frame. Market's a little slow, so don't expect like 90 days. But
come on, Chris.
Even if you made $30,000 out of and put out 80, the return on investment. Remember, you could maybe do that twice a year, get 60 out of 80. Your return on investment's like 75%. It's not going to be like the 0.89 or 8.9 or the 11.2 or any, but that's clearly an active investment, has risk. But guys like me that don't know much about crypto and all the different stuff, like I don't even pay attention to it. I can do that and get better returns, 30-40% returns, minus this last 6 months. And flip houses, and same thing with lending money. I mean, I can put out stuff in hard money loans and get 12-13% for my money, and it just funnels back into the 401k.
Exactly. I think that's, so many of our clients love to have that control and knowing exactly where your money is. Our money is in the stock market, or we have it invested in a 401k. Most people can't even tell you what all of their investments are. And so you're really relying on the volatility of the stock market too, to see that growth. You're hoping you're not losing any. And so having this strategy where you're all in this industry, most people who are watching right now probably know a lot more about real estate than they do about the stock market. And so if you can get that bigger return and you can keep it compounding and you keep that in there, knowing exactly where your money is, you're probably going to get to your retirement goals faster and, hopefully easier than you would if you had it in the stock market. So those are all just kind of things to consider. And of course, you don't have to have all of your retirement accounts invested in real estate projects, but you certainly can. I mean, if you're someone that has a good track record, or you're working with someone that has a good track record and you want to just keep it going that way, obviously there's no guarantee, but the chances are probably better, right? That you'll see that return.
Yeah, I was going to run through just some options, and correct me if I'm missing any. Like if you got a big account, you could pay for the house and the rehab. You can, like you said, buy into an apartment syndication. You can maybe it's $100,000 to buy into the apartment syndication or a storage syndication that someone's putting out there. You can lend it. You can do, I think, Luke, you do a lot of gap funding with people that might have self-directed money to where they got smaller amounts, but they're just funding your rehab, which might be like 30 or 40 grand.
Correct. Yeah.
I didn't misstate any of that, right?
Oh, to me? No. Yeah. That's
I was asking Shae. I'm just.
I was like, yeah, that's right.
Yes. Yeah. So yes, there are so many different ways that you can use that. So you can obviously purchase 100% cash with the project out of your retirement account. For those people that maybe even want to dip their toe in and they don't want to use their whole retirement account and they want to, like Chris said, loan $20,000, $30,000, $40,000 to Luke for, second position, I guess, funding, you can do that. And what are your interest rates? Just so we kind of get an idea on what some clients might see there if they want to.
So I usually pay 12%. We usually do 12%, and then we usually do if it's just rehab, it just depends on how long someone's been with us, or like how bad we need the money at the time. But I mean, certain times we'll offer half a point, on the purchase price of the property. So so for example, if you're buying that property, say for 400 grand, then you're going to give a $2,000, kind of bonus as like half a point for doing the loan. And then you make 12% on the money that you lended. So usually, as Chris said, it might be a gap fund. So, if it's like 20% down or something like that, then maybe it's, what is that? 80 grand or something like that. So, and then that's typically how we end up doing it. So you're making 12% on that 80 grand, which is, based over the year, it's about $800 a month on that. Say we hold it for 3 months, then you're making 2,400 there. Plus you made your 2,000 off of the initial half point. So, you're making about $4,400 in 90 days on 80 grand.
Yeah.
And then again, if we can turn that in, 3-4 months, if it's a fairly easy project and you do that 2 or 3 times a year, let's just say with those same numbers, then somebody could be making, 12, 13 grand on 80 over the course of a year, which, a lot of people are very happy with, as, most people don't have, I think that this industry, when you're kind of in this bubble that we're in, a lot of people get blinded or jaded by the fact that, we're in this on a daily basis. So we have opportunities to get better deals regularly, where there are a lot of people out there that might be a dentist or doctor or whatever it is, that make really, really good money, but they're not put in positions daily to go make, 100% on your own money by doing a really solid flip. That's not super realistic for the average industry. And so that's why you find a lot of people that are extremely happy with making 12% on their money, and maybe getting a point. So, we've even averaged it out. I think a lot of times with us, it ends up turning out to be around 20% on your money if you average it out over the year.
Right.
So
go ahead. No, go ahead.
I was going to say, I do it slightly differently than what Luke does, but to the same effect. It's professionals, executives that might have 50 to 100,000 that want to invest and just keep it moving forward. So instead of paying points, I'll pay a little bit higher percentage and compare it to, like, if there's a hard money lender and they have a 1 month guaranteed interest, I'll say, hey, because you're in second lien position, I'll guarantee you 2 or 3 months, depending on how long I think that the turn time is going to be. So even if I sell this in 30 days, you're still going to get that little extra cushion. It's essentially what the first money lender does. But for the benefit of you taking on a little bit more risk, I'm willing to pay a little bit more. So it'd be interesting to see how the numbers flesh out a little bit. But it's a really great attractant to be able to have someone get off the fence and say, I'm willing to take a little bit more risk. This is a great turn, especially with experienced operators.
Yep.
Yeah, the opportunity is there, and for when people learn that they can do this because they want to invest more, but they don't want to dip into their their liquid funds, their personal accounts. This opens up so much opportunity for you guys, right? When more people understand that they want to keep working with you, but maybe they feel like they're tapped out as far as what they can. Right. And then when they realize they have these accounts, it's a win-win for everybody.
Mm-hmm.
I think it's also good when, obviously all markets are cyclical, right? But like some people have had, back to the Honeywell example, they might have $200,000 and this guy running the Honeywell account invests in these 4 to 5 mutual funds, right? So and obviously those adjust over time. Well, if you're more active in the business, or I definitely had some people even get later in life and be like, I got out of the corporate world, and they're like, man, I want to do what you do, and I'm kind of semi-retired, but I don't have the cash. And it's like, well, you do have the cash, you just don't know how to access the cash.
Right.
Chris, don't you dare say you're semi-retired. You're retired. Come on. Yeah, right. Chris is a constant deal finder.
I was going to say the most non-retired retired person.
He'll never stop. He'll never stop hunting deals.
Yeah.
Like
a shark, you got to keep moving.
Yeah, exactly.
It's funny is I actually, everybody's like, oh, how do you do certain stuff? This is kind of funny. It's my little VA. I don't know if you can see this, but you can't. Anyway, I get a report every day since last January. I can tell you that 10,675 houses have been sent out by wholesalers since January. So we're talking 18 months. 10,000 and 202 have transacted. Now I only let those, like, once it goes out on first, it might go on my list and then it goes on somebody else's list. So I give it up to 6 months to give it transacted. And I can literally tell you, let's see, there's 367 people have bought more than 2 and only 68 that have bought more than 3.
Really?
And I get that
That's
report every
interesting.
single
68
day.
people have bought more than 3 houses since
Yeah.
January?
Yeah. Only 68.
Wow.
And so there's
So
only,
so most of these are just, the large majority are just one-offs.
yeah, one off. Like it's,
Wow. I wouldn't have expected that.
but to the point of that,
That's
how many
crazy.
people are willing to try this once and then they realize that
It's not fun. I'm just kidding.
Not like the TV shows.
Yeah, no, exactly.
we're not going to go out there and do it and make $100,000. It's
Yeah.
like you got to
Right.
do all the stuff and
Yeah.
make sure you're doing with the right vendors and
Well, like
you know,
you said,
all the
it's
stuff
not
that we
as
know
market.
just
Yeah.
every
It's
day.
a Tuesday to us.
Yeah.
Well, it's taken you all a long time. You've been doing this for how many years? I mean, collectively, all of you put together.
Like
It's
100. I feel
right.
like. Depends
So
on the day,
it's
Shae.
not-
Depends on the day.
Yeah.
It's not as easy as just watching a show, right? And then going out and
Yeah.
doing it right.
Especially in this environment. Yeah.
Right.
Yes,
Right.
exactly.
But you got to love the HGTV shows because, like, to the point, like 68 people this year have bought more than 3 houses, but like, you know, we've transacted way more than that. So, like,
Mhm.
you know, I hate to say it, but like having a big list helps.
Yeah.
Just
Yeah.
I'll tell you guys
So-
what I'm sick and tired of. I'm sick and tired of paying 3% concessions.
Mm.
I am over it. All right. Can this market please just shift so that we can stop paying 3% concessions no matter what? No matter who the buyer is, I don't care. It's 3% concessions. I don't know. I don't even know if I need it, but I'm going to add it.
Yeah. Are they asking for ACs on top of that too? Like repairs?
The last one that we did is 3% concession, 3% buyer broker, and a new AC in it. So
Yeah. Yep. Man.
Oh man, I'll tell you what.
I'll,
Good
yeah,
time.
I'll keep
That's
some of
why
my
we leave
comments
that
to
up to
myself.
you, the professionals. I haven't tried it yet because that's
Well, don't try it in 2025. It's not been amazing.
Yeah, no joke.
Yeah.
But anyway, I'm gonna run my little commercial now. We took the month of August off, but we are back at the Phoenix REIA on the 3rd Tuesday of the month. We have Susan Nichols coming back out for the 2nd year in September. She is so we've moved over to the big room at Orange Tree, and we're I think we're a month away and we got over 100 registrations already, and I haven't even sent it out yet. So anyway, so if you want to be in the community, network, all the stuff, the Phoenix REIA is on the 3rd Tuesday of the month. We got like I said, the commissioner, then we have the expo in fall, and then we have this thing called the Christmas party.
Yeah,
So
Gosh.
those will be the 3 fall events, and yeah. Anything else we need? I put your contact information, at least your email, on the comments so that everybody can email you if they have any questions or so.
Perfect. Yeah, I'm at all the meetings. We'd love to come. I love inviting everyone to the event. I think you're to all the meetings. Your group is so good and so much great networking. I've certainly learned a lot, and a lot of our clients have enjoyed coming over. So, but yeah, if you have any questions, even if you just want to understand how to ask a client or how to just share this with your family member who you want to say, oh, did you know you could use your retirement account to invest outside the stock market? And they say how. We're not expecting you to be able to go and explain all that. You say, well, I'll contact you at Vantage. She can help break it down, but it's really simple. I love answering those questions and helping you set up an account, or just being able to think creatively outside of your normal box on how you can, increase your raise, or how you can use your funds for your own project. So contact info is there. I'm happy to help.
Yeah. Well, thanks for jumping on. We appreciate it. And we we don't have anybody scheduled for next week. On just another one, the day after the holiday, which is September 2nd, I'm sure we're all going to be just like getting back from vacation and doing all that fun. So we're not going to have a red room, but I do have a land guy, Adam, who was referred to me by Dina at Fidelity. He would like to jump on. So we're going to be talking land on 9/9. I don't know what we're talking about next week, but we'll figure out something, and we'll be back next Tuesday.
Love it.
See you guys on the next one.
Thank you guys.
Thank
See
you.
soon.
Thanks,
Bye.
Shae.
My pleasure. Good to see you guys.